Good weekend all. Ira Epstein with your metal market wrap up, and this is for Sunday, the 30th of January 2022. Well, it's football day. You know, we're going to be glued for the next 4 to 6 hours watching a lot of football. I've already been up since 3:30 in the morning watching tennis and then the Daytona 24-hour race. So I've had my hands full with sports, love it, but I want to get this out for everybody. So let's talk about what the markets are doing. We did get some information over the weekend. You might want to hit pause if you want to read this. You can see what's come out. The biggest event to me is China. They've gone into a bit of a stall in their economy. I think it's a mixture of the Omicron, and of course, they've got the lunar holiday coming up, so that's not going to improve this week. Now, as we step over to a monthly chart of gold, you have not on a monthly basis back since here. It's important to recognize this. Back in August, been able to stay on a monthly basis over the 18-week moving average of closes. You've tried, but you haven't succeeded. You keep falling back. If the market falls from here and gets through last month's low of 1778.80, not now, not tomorrow, because this is still January. I want to see that happen in February. If you're bearish, then I think you're going back down here, 1638, 1683.60. If you're going to go into an area where you go into a big decline and you're looking for support. I'm not saying it has to go there. That would be the bear news. That's though on a monthly basis. On a weekly area chart of just closes, you were down 2.5%. And you've gone back after a while now, where now it's taken a while on this since specifically Friday, December 10th. This is a weekly, and that was the last time you closed underneath the 18-week average of closes. So it has taken the market a month and a half, a little more than that, but here you are back under that number, which puts the bias to the downside. Let me explain that. When the market is under the 18-week average, I have a bearish bias. When it's over it, I have a bullish bias. When I look at gold as the bar chart now, of just looking at the weeklies, you have a big outside week down. An outside week is always helpful. If the high of this week is taken out this coming week or the week after, I call this a bear trap, and I'll look for the market to challenge the closest of a Bollinger Band or a key moving average above the market. Key moving average being the 18, the 45, some people use the 50, and the 200 week average of closes. And that's because of how that pattern looks. The swing line stepped out of an uptrend. Prior to this week, you had a pattern of higher lows, higher highs. You broke that pattern this week. The market also closed underneath the combination of the 18-week and the 100-week, and they're lined up in a bearish formation as the 100-week is above the 18-week. The next number of support, if it goes to a key moving average, is the 200-week. More likely are the Bollinger Bands, an algorithm designed to keep the market trading within them 95% of the time. That number is 1741.50. So the failure was happening at the upper Bollinger Band. It pulled back, fought at these moving averages, and shifted gears suddenly where you're no longer in a bullish gear, but I'm not saying you're in the bear gear because you don't have a pattern of lower highs, lower lows, more or less sideways action. Momentum down, bias down, caught in between these with the real battle fighting at what number? The 18-week average. How many weeks have you just been trading against that number, basically? That's what's really been going on. In terms of the gold-silver, the higher this number goes, the more silver you need to trade in to get 1 ounce of gold. So that's bearish for silver. The higher it goes, it's bullish the lower it goes. And in the silver market, like gold, let me talk a few things here. Number one, silver was never as strong as gold. It never has gotten back up to its upper Bollinger Band since May and June of this year. It has had no problem getting to the lower bands. So the market's had an easier time on the downside. The second thing is it keeps fighting, and recently fighting over the past 5 weeks at the 18-week and the 100-week average of closes. If you look at the copper market, you're caught in sideways action, which I've been telling you I expect. I don't think the market's going to do anything until we get to the end of this week, as the market starts anticipating Chinese demand and Chinese traders then coming back into the market. That's my guess on it. We'll see what happens. Lunar holiday, and they're the 50% of the world buying. No, I wouldn't be too crazy there on the long side. Am I seeing a trend? None at all. Platinum market, higher lows, higher highs, bullish. Momentum, flat to up. The trade probably going to pick to get long here, and where the risk would be is getting under this low of 924. Is that type of trade for everybody? $70. It's very large. I don't know. In the dollar index, you're up to the upper Bollinger Band. If you follow my method of teaching and trading, first time you hit Bollinger Bands, the professional money right at that zone takes money off the table. I know you're going to tell me, but Ira, it keeps going higher. You have other opportunities. It doesn't always keep going higher. You don't know that to be the case. So that's what they do. They play the percentages. And if you go back and do your homework, you'll see what I'm saying there. So when I put this all together, I'm trying every day, starting at 5:30 in the morning with the 20-minute video, going through the futures markets for you. Tell you the news of the day that's coming out, where we're at, what the chart looks like, because I'm not going to be in that. You'll hear my voice, but I'm showing you in detail 40 charts, going through for you what I think you do there. Now, I know a lot of you trade spiders and ETFs. I cover those. Then in the second phase, we have a combo offer where you get the futures first, then you can get the spider ETF. You want to see what both do. I then tie it into that. So at 5:30 or so, I start recording futures. By 9, I'm recording the spider ETF. I want the first 30 minutes of spider ETF trading in New York to get out of the way, the new money to get deployed, especially over a weekend, beginning of a month, whatever it is, and away we go. And on the daily basis, I want the daily news to hit the market, so we now are seeing what's on. Most key government reports come out between 6 and 9 a.m. Central Time. So I'm able to see them, I'm able to tell you what the report did, the analysis for it, and we're now looking at the live action, getting into what the market's doing. How do you get all this, and how do you find out more? It's real simple. Just go to our website under the keyword research. It's taken care of there. I'm Ira Epstein. You have a good day. Talk to y'all on Monday. Take care.